So I asked my wife, what is a budget? And she came up with this very beautiful analogy. She said that a budget can be likened to a healthy diet. Most people want to follow them. They start off with a plan, and then there's a chocolate cake that they don't need, but they end up buying the chocolate cake. My name is Jacques Taljaard, this is Practitioner Accounting Services, and today I'll be explaining actually what a budget is. In short, as I've mentioned earlier, it can be likened to a healthy diet, in the sense that if you follow it, you stick to it, it will help you to maintain and achieve your goals. So to start off with, a budget is basically just an estimate of revenue and expenses. But a budget is applicable for a specific period of time. So you don't really go and set up a budget for the rest of your life. You set up a budget for the next couple of months, the next year maybe, and you try and stick to that as far as possible. Because life happens and things change. Now a budget can be applicable for almost every instance. A person, a business, a government, an area, a school. It can be applicable to pretty much everything that earns an income and occurs expenses. When it comes to revenue and expenses, there's typically three terms or three types of budgets that you can consider. The first one is considered a surplus budget. That is where, according to your budget, your revenue will exceed your expenses. The second option, or the second term, is a balanced budget, and that is usually where your revenues and your expenses are more or less equal, and then the third option is obviously a budget deficit, where the revenues are less than the expenses, which is most likely found in government and state budgets. So usually you can find two types of budgets: a static budget or a dynamic or flexible budget. A static budget is where you set up your incomes and your expenses, you set up your figures from in the beginning, and they stay fixed, they stay static throughout the entire period of the budget. With a dynamic or a flexible budget, you can usually set your figures now. 3 weeks later you realize, oh wait, there's this new situation, life happened, you make an adjustment to your budget. This does not mean you can spend as you please. Generate your budget, set your budget, stick to your budget, but when there are new information that comes to light, that comes to the front, when there's new circumstances that makes itself known, then you adjust your budget. You still stick to it, to make a small adjustment. So what is the budgetary process? Usually you determine first off the period for which you are budgeting. Is it a 1 month period, a 1 week period? Is it for a specific project that is estimated to be 3 weeks or 5 weeks? Is it a 6 month period? Is it for the next financial year? Or is your budget an estimate for an entire project that can span 20 or 30 years? That will then most likely be a flexible budget. So that's the first step, is determining the budget for, or the period for the budget. Then in a corporate entity or in a corporate circumstances, you would then, the next step would be doing your sales budget, budgeting the amounts of sales and what your turnover will be. If it's a personal budget, you will then likely budget on your incomes, what you are earning. This is usually salary, rental income, interest, dividends, that kind of thing. But for a company, that would be your sales typically. The next step would be to prepare an operations budget or a productions budget, where you determine your capacity. Now in a personal budget, this step is taken out because your production budget or your operation budget is going to tell you exactly how many units you have to manufacture or to produce in order for you to meet those sales targets that you are budgeted for. Then the next step would be to, obviously, now that you know what your operations are going to be and you know what your sales are, you can accurately budget your expenses for those for that period. Then from the expenses, you start with a cash flow budget, also known as a cash flow forecast for the next period. This will then be the different elements which you consolidate into one big master budget, from which you usually then prepare a set of financial statements, which would be called the budgeted financial statements. Again, most of this, the incomes, expenses, and cash flow can be considered for personal as well as a corporate budget. The master budget can be considered for both. A production and operations budget is usually just separated or usually just applied for in a corporate entity. And that is the basic of what a budget is, how to go about a budget. My name is Jacques Taljaard. This is Taljaard Accounting Services, and I hope you have a great weekend.